Welcome. In this video, will Swftc coin be 10 cents? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. In the previous video, we pointed out a very critical technical structure on the chart we analyzed with you. In that analysis, I particularly emphasized the falling trend line that has kept the price under pressure for a long time. This trend line was an important resistance zone that worked like a wall, where the price encountered sales at every attempt. In my commentary at the time, I stated that if the price managed to break this strong downtrend, a serious change in the technical outlook could begin, and an upward momentum could gain momentum. And when we look at where we are today, we clearly see that the scenario we envisioned in that analysis has come true. The price started a very strong bullish move by breaking the falling trend line upwards in volume. Not only did it break the trend, but it turned into a chain rally with a succession of green candles. With traders gaining confidence and buyers entering the market strongly, this move once again demonstrated how technical analysis works. Such breakouts are not just about crossing technical lines. They are also a signal for traders looking for direction in the market. Breaking the downtrend indicates that the bears are losing power and the bulls are taking control. The high volume and the upward candles that followed this breakout made it clear how strong and decisive this transformation was. Looking at the chart again now, we can see that the trend line, which used to act as resistance in the past, may now act as support. This suggests that there is room for the price to consolidate the uptrend by making higher lows and higher highs in the future. Also, with this breakout, many technical patterns are likely to come into play, such as symmetrical triangle, pennant, or cup and handle patterns, which can now be followed with higher targets. Such patterns are valuable not only for short-term gains, but also for long-term trading opportunities. Because a trend breakout is often not limited to a rally that lasts only a few days, it is often the first step in a larger transformation, a longer-term movement. The current bullish movement fits this description. The shift in investor psychology, the momentum in the market structure, and the positive signals from technical indicators all point to a solid foundation for this breakout. In short, as we mentioned in the previous analysis, the break of the downtrend was a critical turning point. And when this breakout occurred, we saw how the price started an upward movement as if it had been unchained. This clearly demonstrated both the accuracy of our technical analysis knowledge and what can be achieved by reading the market correctly. Let's continue with our analysis now. Stay tuned. When we analyze the chart in general terms, we see a very clear Elliott wave structure. When we evaluate this structure step by step, we can easily say that the price first caught an upward momentum with the first wave, then entered a short-term correction with the second wave, and is currently at the beginning of the third wave. According to the basic principles of Elliott theory, the third wave is usually the period of the longest and strongest movement. This is why traders and technical analysts in particular pay close attention to the arrival of the third wave, because this is the phase in the market when there are the most opportunities for gains, when buyers boldly step in, and when the price has the potential to rocket, so to speak. Let's start with the first wave. This is the period when the first spark of bullishness is lit in the market. Usually, most traders have not yet recognized the trend reversal and consider this rise as a temporary reaction. But technically, this first wave forms the cornerstone of a new structure. The second wave that follows is a pullback, often caused by investors' profit realization or a lack of confidence in the previous downtrend. While this wave of correction makes many think that the market may still be bearish, in Elliott theory, it's just a natural correction at the start of a big uptrend. And now, we come to the most exciting part, the third wave. In technical analysis, this wave is known as the most remarkable, the most violent, and the most lucrative. This is because in the third wave, investor psychology is transformed. The general market participants recognize that the trend has changed. There is confidence that the uptrend has begun, and with this confidence comes intense buying pressure. Demand increases, volume rises, and the price shoots upwards as if unchained. Right now, we see exactly these dynamics starting to unfold on the chart. Fibonacci expansion levels give us very clear targets at this stage. According to the Fibonacci projection measured on the chart, the minimum expected level of the third wave is 1,618. This level is one of the most fundamental points of the Elliott theory and is considered to be the most frequently reached point of the third wave. However, the price action doesn't have to stop at this level. On the contrary, with a stronger buying pressure, the Fibonacci 2272 level can also be targeted. This level is now the zone where aggressive buyers are in place, and the bullish momentum has reached its peak. If the market crosses this level, Then higher Fibonacci expansion points such as 2,618, 3,272 may also come into play. However, it is important to note that the third wave is divided into 5 subwaves. In other words, the first subwave of the third wave may be forming right now, and we may be in for a period of both short-term corrections and continued bullishness. This means that the current move could be just the beginning of a marathon. Such patterns are not just numbers or drawings in technical analysis, but also deeper constructs that represent the investor's psychology, expectations, and market dynamics. In conclusion, looking at the current position of the price, it is clear that the first and second waves in the Elliott wave structure have been successfully completed, and the third wave phase is currently being entered. While the 1,618 Fibonacci level stands out as the minimum target, the 2,272 level stands as a possible target in case of a strong buying wave. If market conditions continue to support this structure and external factors do not suppress the price, this wave can be considered both a confirmed structure in terms of technical analysis and a potential opportunity for investors. It is important to remember that Elliott wave theory is not a prophecy, but a powerful analytical tool for understanding price behavior. But when applied correctly, it can foretell the strength and direction of a trend well in advance. The current structure gives us important signals that the price is about to gain new momentum. For the price to be 10 cents, it is enough for the price to complete the third wave. When we examine the MACD indicator, the current setup is quite striking. It is clearly observable that the histogram bars are getting longer and the MACD lines are moving upward above the signal line. This kind of structure shows us quite clearly that the market momentum is increasing in a positive direction, indicating that buyers are gradually gaining more control. In particular, the strong upward separation of the MACD line from the signal line signals robust bullish momentum. This divergence is a technical reflection of growing positive expectations in the market and typically serves as a strong indicator that price action may follow suit. Since the MACD is based on exponential moving averages of past prices, it provides a sensitive view of the balance between buying and selling pressure. At present, the upward slope of the MACD lines and the continued expansion of histogram bars in the positive zone confirm that momentum is still developing in favor of the buyers. This suggests not just a temporary bounce, but potentially the technical foundation for a trend-oriented upward move. In other words, the likelihood of price staying at current levels is being replaced with the possibility of testing higher levels. Of course, one key point to consider here is that the bullish movement observed in the MACD gains much more reliability when supported by volume. If trading volume increases as the price rises, it strengthens confidence in the sustainability and stability of the move. We can currently see signs of this alignment forming. To summarize, the positive structure observed in the MACD indicator paints a highly optimistic picture from a technical analysis perspective. If this trend continues and the MACD lines keep expanding upward, it will significantly support a continued upward move in price. In such a scenario, investor sentiment improves, confidence increases, and with new buyers entering the market, the bullish momentum could gain even more strength. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.